What if I told you some of the most powerful food businesses in America aren't backed by billion-dollar corporations, but by black entrepreneurs who figured out how to turn burgers into serious money machines? This isn't just about food. It's about how attention, loyalty, and branding turn simple menus into serious money. Behind the scenes, these brands are using smart strategies, cultural influence, and loyal audiences to build systems that generate revenue far beyond the kitchen. In this video, we break down how 8 black-owned burger brands actually make money. At 8, Romeo's Vegan Burgers. We begin with a brand that didn't rely on big funding or flashy launches, but on timing, positioning, and a clear understanding of where the market was heading. Romeo's Vegan Burgers was co-founded by black entrepreneurs Damini, Romeo Graham, and Derek Romeo Glover, 2 visionaries who saw an opportunity where others weren't paying attention. They weren't just building another burger spot, they were building a business rooted in culture, community, and a fast-growing shift toward plant-based living. And instead of rushing into a traditional restaurant setup, which is where many businesses burn out, they made a very intentional move. They started with a food truck. Now, that decision might look small on the surface, but financially, it's a power move. A food truck removes the heavy costs that usually weigh businesses down from day one. No expensive leases, no large staff, no overwhelming overhead. What that creates is flexibility, and more importantly, it creates space to become profitable much faster. And they use that advantage well. Rather than waiting for customers to discover them, they place themselves directly in high-demand environments, busy streets, major events, nightlife scenes where people are already spending money. That positioning turns visibility into immediate sales, and sales into steady cash flow. At the same time, it gave them something even more valuable: real-time feedback. They could see what worked, what didn't, and adjust instantly. And as that momentum built, something deeper started to happen. Customers weren't just buying burgers, they were buying into what the brand represented. Because in the plant-based space, people are not just consumers, they're believers. And when a brand aligns with lifestyle, identity, and culture, loyalty becomes stronger. For Romeo's, that meant customers who didn't just return, but who talked about the brand, shared it, and promoted it without being asked. That kind of organic attention reduces the need for heavy advertising, which quietly increases profitability. Then came the next phase, but not by guesswork. Once they had built a loyal following and proven demand, they transitioned into a physical location, and by that point, they weren't experimenting anymore. They were executing. They already knew their audience, their best-selling items, and how to deliver consistently. That shift opened up a wider stream of income. Now, revenue doesn't rely on just foot traffic. It expands into online orders, delivery platforms like Uber Eats and DoorDash, and repeat customers who already trust the brand. The business moves from being a daily hustle into a structured system that can generate income from multiple directions at once. What Damini Graham and Derek Glover have created isn't just a restaurant. It's a scalable concept. One that started lean, proved itself in the market, and positioned itself for growth. Number 7. Slutty Vegan Burgers. At number 7, we move from a quiet, calculated build to a brand that exploded through culture, controversy, and undeniable attention. Slutty Vegan was founded by Pinky Cole, a black entrepreneur who didn't just enter the food industry, she disrupted it completely. What she built isn't just a burger business. It's a cultural phenomenon that converts attention into serious money. And it all started with something most people overlook: a bold name. Slutty Vegan wasn't designed to play it safe. It was designed to spark curiosity, conversation, and even controversy. And in a world driven by attention, that strategy worked perfectly. People didn't just notice the brand, they talked about it, they shared it, they lined up for it. And that's where the real engine begins. Because in today's economy, attention is currency. From the beginning, Pinky Cole understood that selling food alone wasn't enough. So she built an experience around it. The branding, the tone, the energy, it all feels different. From the playful menu names to the unapologetic voice of the brand, everything is designed to stand out in a crowded market. And when people feel something, they remember it. That emotional connection turns first-time customers into loyal fans. And loyal fans don't just buy, they promote. Social media becomes filled with organic posts, long lines become part of the brand image, and suddenly, demand starts feeding itself, which means less reliance on traditional advertising and more profit staying inside the business. But the strategy doesn't stop at hype. Behind the scenes, the business is structured to capture that attention and turn it into consistent revenue. Once the brand gained traction in Atlanta, expansion became the next move, but not in a rushed, careless way. Each new location builds on the same formula: strong branding, high demand, and an audience that already knows what to expect. So every launch doesn't start from zero, it starts with momentum, and that momentum translates directly into sales. At the same time, the menu itself plays a subtle but powerful role. Like many plant-based concepts, the perceived value is high. Customers are not just paying for food, they're paying for the experience, the culture, and the identity attached to it. That allows pricing to stay strong while keeping costs controlled behind the scenes. And over time, that difference builds serious margins. But what truly separates Slutty Vegan from many others is how the brand extends beyond the food. Pinky Cole has positioned the business as more than a restaurant. It's a movement. Through community engagement, partnerships, and a strong public presence, the brand continues to stay relevant, visible, and culturally connected. So instead of fading after the initial hype, it evolves. And that's where the real money is. Because when a brand becomes part of culture, it stops relying on just transactions. It starts benefiting from loyalty, influence, and long-term customer relationships that continue to generate revenue over time. Number 6. The Vegan Hood. At number 6, we shift from viral hype to something more grounded, but just as powerful. The Vegan Hood is led by Chef Andy Wiederhorn, a Black entrepreneur and chef who built his brand with a very clear focus: serve the community, stay consistent, and let loyalty do the heavy lifting. Now, unlike some of the louder brands on this list, the Vegan Hood didn't rely on controversy or massive online buzz to grow. Instead, it took a different path, one that many businesses underestimate. It built trust. From the beginning, Chef Andy wasn't just creating plant-based food for a niche audience. He was introducing vegan meals in a way that felt familiar, accessible, and rooted in culture. That approach matters because it removes the barrier that often keeps people away from plant-based options. And once people try it and enjoy it, they come back. That repeat behavior is where the real money begins to take shape. Because in the food business, consistency is everything. When customers know exactly what they're going to get every single time, they don't hesitate to return. Over time, that builds a steady flow of daily sales that doesn't depend on trends or viral moments. And that kind of reliability is powerful. But it goes deeper than just good food. The Vegan Hood is positioned as part of its local ecosystem. It's not just a place to eat, it's part of the neighborhood. That connection creates a different kind of customer relationship. People don't just support the business because of the product, but because of what it represents. And that emotional connection quietly drives revenue. Because loyal customers visit more frequently, spend more over time, and bring in new customers through word of mouth. So instead of spending heavily on marketing, the business grows through community-driven visibility. And that keeps costs down while revenue stays steady. At the same time, the menu itself plays into the strategy. Plant-based comfort food allows for controlled costs while maintaining strong pricing. Customers feel like they're getting something unique, something healthier, and something culturally relevant all at once. That perception increases value, and value supports margins. But what really makes this model work is discipline. There's no rush to overexpand, no pressure to chase every trend. Instead, the focus stays on maintaining quality, serving the existing audience, and strengthening the brand's foundation. And over time, that consistency compounds. Because when a business becomes known for reliability, it earns something that's hard to buy: trust. And once trust is established, revenue becomes more predictable, more stable, and less dependent on external factors. So while it may not look flashy from the outside, the Vegan Hood is operating on a model that many businesses wish they had: a loyal customer base, controlled costs, and a system that quietly generates income day after day. Number 5. Fish Scale Burger. Coming in at number 5 is a brand that didn't try to compete in the crowded burger space. Instead, it rewrote the rules completely. Fish Scale was founded by Mohammed Abdullahi, a black entrepreneur who understood something most people overlook in business. You don't always win by doing what everyone else is doing. You win by creating your own lane. And that's exactly what he did. Instead of building another beef burger brand, Fish Scale focused on something different: seafood burgers. Now, on the surface, it sounds like a simple twist, but in reality, it's a strategic move that changes how the entire business operates. Because the moment you introduce something uncommon into a familiar market, you create curiosity, and curiosity brings people in. People don't just walk into Fish Scale because they're hungry. They come because they've heard about it, they've seen it online. They've been told they need to try it. That kind of word of mouth is powerful because it doesn't feel like marketing. It feels like discovery. And when customers feel like they've discovered something unique, they're more likely to share it. That's how attention starts to multiply without heavy advertising. But what Fish Scale does next is what turns that attention into money. It builds an experience around the product. From the branding to the presentation, everything feels intentional. The food doesn't just arrive, it's introduced. The environment doesn't just serve, it engages. And that subtle difference matters, because it allows the brand to move beyond being just food into something more memorable. And when something feels like an experience, people are willing to pay more for it. That's where pricing power comes in. Because Fish Scale isn't competing with fast food pricing, it's operating in a space where customers expect to spend a bit more. Not just for the food, but for the uniqueness, the quality, and the story behind it. And that gap between expectation and cost quietly strengthens margins. But behind the scenes, there's another layer. By focusing on seafood, the brand taps into a different supply and demand dynamic. While beef burger spots are everywhere, seafood-based concepts are far less saturated. That means less direct competition and more room to stand out. And when competition is lower, customer attention is easier to capture. At the same time, Fish Scale benefits from location strategy. Being based in Washington, D.C., a city filled with professionals, tourists, and high-spending customers, the brand positions itself in a market where people are open to trying new concepts and willing to pay for them. That environment supports premium pricing without resistance. And then comes consistency. Once customers try the product and enjoy it, they come back. Not just for the food, but for the experience they associate with it. Over time, that repeat behavior creates a steady flow of revenue that doesn't rely on constant hype. And that's where the business stabilizes. But what makes Fish Scale even more interesting is its potential. Because once a concept like this is proven, once people accept and embrace seafood burgers, it opens the door for expansion. New locations, partnerships, or even scaling the brand into other markets becomes possible. And at that point, the business is no longer just a local spot. It becomes a system. A system built on differentiation, experience, and a clear understanding of how to turn something simple into something people are willing to pay more for. So while others are competing in crowded lanes, Fish Scale took a different route entirely and turned that decision into a business model that quietly generates real money. 4. Burgeezy. At number 4, we move into a brand that shows how powerful a niche can become when it's built with consistency, identity, and timing. Burgeezy was founded by Kadisha Wiggins and Antoine Wiggins, a black husband and wife team who saw an opening in the plant-based food space and decided to build something that felt both familiar and different at the same time. Because that's the key to Burgeezy's strategy. It's not trying to reinvent burgers. It's trying to reimagine comfort food in a plant-based way that still feels satisfying, indulgent, and accessible. And that positioning matters more than people realize. Most vegan brands struggle with one major challenge: convincing non-vegans to try their food. But Burgeezy avoids that problem by leaning into something universal. Comfort food, burgers, fries as familiar flavors, just reworked in a plant-based form. That makes entry easier for customers. And once customers try it, something important happens. They realize they don't have to be fully vegan to enjoy the experience. That single shift expands the audience massively. Now the brand isn't just selling to vegans, it's selling to curious eaters, health-conscious customers, and even regular fast food consumers looking for alternatives. That broader appeal quietly increases traffic without needing aggressive marketing. And that's where the money starts to build. Because Burgeezy operates in a space where costs can be controlled while pricing remains strong. Plant-based ingredients often allow more predictable supply costs, while the perceived value of healthier fast food gives the brand room to price above traditional fast food competitors. That gap between cost and perceived value is where profit lives. But there's another layer working in the background. Burgeezy is deeply community-driven. It didn't grow through massive corporate funding or global campaigns. It grew through local support, word of mouth, and repeat customers who felt connected to what the brand represents. And that kind of loyalty is powerful. Because loyal customers don't just return, they bring others with them. They post online, they recommend the brand, and they become part of the marketing engine without the business spending heavily on ads. That reduces acquisition costs and strengthens long-term revenue stability. As the brand continues to grow, it also benefits from scalability. Once a concept like this is proven in one location, the model can be replicated in others without changing the core identity. Same idea, same appeal, same audience psychology. And that's where the real potential begins. Because Burgeezy isn't just a restaurant, it's a concept that can be expanded, franchised, or adapted into different markets where plant-based demand is rising. Number 3. Trill Burgers. At number 3 is the Trill Burgers. Founded by Bun B, a black hip-hop icon, who didn't just attach his name to a food business. He built a brand that understands modern attention better than most traditional companies ever will. Because Trill Burgers isn't operating like a typical restaurant, it operates like a drop culture brand. From the beginning, scarcity has been part of the strategy. Instead of trying to serve everyone at once, Trill Burgers often shows up in limited pop-ups, events, and curated appearances. And that limitation creates something powerful. When people know something won't always be available, they move differently. They show up earlier, they wait longer, they talk about it more. And that behavior turns a simple burger into an experience people don't want to miss. And that's where the money starts to shift. Because in this model, value isn't just in the product, it's in the moment. A single pop-up can generate massive foot traffic, but more importantly, it generates something money can't easily buy: visibility. Long lines become content. Customers become promoters. Social media turns into a free marketing engine where every post reinforces the brand's popularity. And once that cycle starts, it feeds itself. But what makes Trill Burgers especially powerful is who's behind it. With Bun B's influence, the brand enters the market with something most startups spend years trying to build: instant trust and cultural relevance. People don't just see it as a burger brand, they see it as part of a larger cultural identity tied to music, Houston culture, and Black entrepreneurship. That cultural connection is important because it lowers resistance. Customers don't need convincing. They already feel connected to the brand before they even try the food. And once they do try it, the experience reinforces the hype. But the real financial structure behind Trill Burgers isn't just sales from food, it's moment-driven revenue. Every appearance becomes an event. Every event becomes a content opportunity. And every content moment expands the brand's reach without traditional advertising spend. And as demand grows, the brand gains leverage. That leverage opens doors to partnerships, sponsorships, and larger-scale distribution opportunities. What starts as a pop-up burger concept begins to evolve into a scalable cultural brand with multiple revenue streams tied to its identity. And that's the key difference here. Trill Burgers doesn't rely on being everywhere. It wins by being unforgettable in the moments it shows up. Number 2. Fatburger. At number 2 is a brand that proves something powerful. Sometimes the real money isn't in starting from scratch, but in owning and scaling a legacy that already works. Fatburger may have started decades ago, but its modern growth story is deeply tied to Andy Wiederhorn, a black business figure who, through Fat Brands, helped transform Fatburger into a global franchise machine. And that's where things shift completely. Because Fatburger isn't operating like a typical restaurant anymore. It's operating like a system. From the outside, it looks like just another burger chain with multiple locations, consistent branding, and a familiar menu. But behind the scenes, the real money isn't coming from selling burgers alone. It's coming from franchising. And franchising changes everything. Instead of the company funding and managing every location, independent operators come in, invest their own money to open stores, and run the day-to-day operations. In return, they pay the brand through franchise fees, royalties, and ongoing percentages of their revenue. So while each location is selling burgers, the parent company is earning from all of them at once. That means growth doesn't require the same level of risk. As more locations open, income increases, but the operational burden is distributed, and that's how scale is built efficiently. But what makes Fatburger even more powerful is its global reach. This isn't just a US-based operation anymore. The brand has expanded into multiple countries, tapping into international markets where American burger culture carries strong appeal. And in many of these regions, the brand is positioned as premium, which allows for higher pricing. So now, revenue isn't just coming from one market, it's coming from multiple economies at the same time. And that diversification strengthens the entire system. But there's another layer that often goes unnoticed. Fatburger doesn't operate alone. Through Fat Brands, it sits within a portfolio of multiple restaurant concepts. That means shared resources, shared supply chains, and cross-brand efficiencies that reduce costs and increase profitability across the board. So instead of functioning as a single brand, it benefits from being part of a larger ecosystem. At the same time, the brand's long history works in its favor. Customers already recognize the name. There's a built-in level of trust that new brands have to spend years trying to achieve. That recognition reduces the effort needed to attract customers, especially in new markets. And when you combine recognition with structure, you get consistency. Consistent sales, consistent expansion, and consistent revenue. So while newer brands rely on hype or niche positioning, Fatburger plays a completely different game. It leverages legacy, structure, and global expansion to create a system where money flows from multiple directions at once. And that's what puts it near the top of this list. And finally, on Hawkins House of Burger. At number 1, we're not looking at hype or rapid expansion or even viral attention. We're looking at something deeper. Longevity, ownership, and a system that has been generating money consistently for decades. Hawkins House of Burgers is owned by Cynthia Hawkins, a Black business owner who has built something many modern brands are still trying to figure out: a business that doesn't rely on trends, but on consistency and control. Because Hawkins isn't trying to be everywhere, it dominates exactly where it is. Located in Los Angeles, Hawkins House of Burgers has become a staple in its community. And that word staple is where the money story begins. Because when a business becomes part of people's routine, it no longer needs to fight for attention. Customers already know where they're going, and that kind of loyalty creates something powerful: predictable revenue. People return again and again, not because of marketing campaigns or social media hype, but because they trust what they're going to get. The portions are known, the taste is consistent, the experience doesn't change, and in the food business, that level of reliability is rare. But what really drives the financial engine here is volume. Hawkins is known for large, satisfying portions that keep customers coming back. And while the pricing remains accessible, the steady flow of customers ensures that daily sales remain strong. Over time, that consistent volume builds into something much bigger. Because money doesn't always come from charging the highest prices, sometimes it comes from serving more people, more often. And Hawkins does that exceptionally well. But there's another layer that makes this business even more powerful: ownership. Unlike franchise-heavy brands, Hawkins operates with a level of control that allows more of the profit to stay within the business. There are no franchise fees being split across multiple owners, no complex corporate structures taking a percentage. What the business earns largely stays with the business, and over time, that adds up. Because while other brands are expanding and sharing revenue across multiple partners, Hawkins is consolidating its earnings, building wealth through retention, not just growth. And then there's the cultural factor. Hawkins isn't just a restaurant, it's part of the identity of its community. That connection creates a kind of loyalty that money can't easily buy. Customers don't just eat there, they recommend it, defend it, and keep it alive through generations. So there you have it. 8 Black-owned burger brands, each using a completely different strategy to turn food into serious money. But one thing is clear, there's no single way to win in this game. The real question is, which strategy stood out to you the most? Drop your thoughts in the comments. And if you enjoyed this video, don't forget to like, subscribe, and stay tuned for more deep dives into how real businesses actually make their money.